The thing to understand at any time, whether markets that are highs or at lows, is stick to your discipline. Whatever your discipline is, stick to it. So right now, ironically, there's as good a bargains in value as you ever see because of how much value's been neglected. So let's use the oil price that you mentioned in earlier comments. The price of oil is about $58 in the United States right now. So let's go backwards. Chevron offered to buy Anadarko Petroleum for $33 billion and got outbid by Occidental, who paid $38 billion. Occidental now owns Anadarko, and you can buy Oxy and Anadarko for $34 billion right now.
Wow.
You get two companies for the price that Chevron was going to pay to buy one of them.
So you'd buy Occidental and not worry about the value destruction that might be implied in those share prices?
Let's reverse this. You mentioned just a few minutes ago that major companies like Apple borrowed $150 billion last week.
Yes.
It's smart to borrow money right now at record low interest rates. It's smart to borrow that money, and Oxy was smart to borrow that money to buy Anadarko. But it's because Carl Icahn's been running around crying like a kid that got shamed because Warren Buffett got a better price than him, and he's been talking the stock down and saying how terrible these people are, while Apple and all these other companies borrow money are saying that they were geniuses to do that.
All right, so you're going with Oxy, and your picks, by the way, that's one in the oil patch, which is unpopular right now. You have another one in the financials, Wells Fargo. Talk about unpopular. But Bill, I mean, what makes you sure we're not going to face a European bank zombie-like outcome here for people who might think about investing in Wells right now?
Well, I'm glad you led in that way. See, the difference between Wells Fargo and the zombie-like banks in Europe is there's 80+ million millennials that have only been deposit customers, and CoreLogic says that 25% of them want to buy a house in the next year. So they go from being nothing but depositors to being people that are borrowing money to buy houses and cars and use credit cards. So the best potential future customers of Wells Fargo are just kicking into gear. And Wells Fargo and Bank of America and JP Morgan have the best mobile technology because they could afford to spend the money to spread it across.